All right, so when you're first getting started in business or just in your personal finances and you're wondering about financial literacy, you're kind of wondering, what is financial literacy? Like, how do you become financially literate? And so my whole point is this: what is it that the business owner, that the banker, and the investor, what is it that they want to see? They want to see your financial statements. If you're an investor, you want to see how well that company is operating from a financial perspective, to see if there's any efficiencies, areas for efficiencies, areas for improvement, and also if there's some major red flags. If you're a business owner, you want to see your profitability. You want to see if you're making, if you're going to be able to pay yourself that month, or, you know, give yourself a bonus or something like that, or be able to invest into property and equipment and invest back into the business, or be able to make your payroll or pay your subcontractors or vendors or whatever the case may be. And so you need to understand the cash flow. So there's three main financial statements. You have the income statement, often referred as the P&L or profit and loss, and then you have the balance sheet and the statement of cash flows. The income statement, or P&L, it's just showing what your profitability is. It's showing revenue minus your expenses, and that gives you your net income or your net profit. Now, there's a little bit, more to that. But that's basically what it is. The balance sheet is going to show what you own and what you owe. And so the balance sheet, it's listing out the balances of each account. So if you have your bank account, for example, as an asset on there, it's going to tell you the balance of your bank account. And same with the liability. If you have a credit card, it's going to give you the total amount that you owe on your credit card. And that's basically what it is. It's also showing you your equity. And the best way to think of equity, especially if you're a solopreneur, you're the only owner in a business, is equity is just your net worth. That's the best way to look at it. So equity is when it's shared with other people. When you're looking at your personal balance sheet, it's called net worth. And so the balance sheet is just assets minus liabilities plus equity. Net worth is just assets minus liabilities gives you your net worth. And so those are the equations there. All this stuff is very simple. It's simple math. Accounting is just basic math. It's just addition, subtraction, multiplication, division for the most part. There's a little bit of formulas, but for the most part, 80 to 90% of what you need to know, it's really just in the basics. It's really just being able to read the financial statements, make sense of them, and understand exactly what it is that you're looking at, so it doesn't look like a foreign language or something like that when you're receiving those from your bookkeeper, from your accountant, or you're trying to make sense of it yourself. Now, I created a video that goes in depth further, and the first place that you should start is with the PFS. That's the personal financial statement. That's really where you're going to make everything applicable. Everything else is going to come to fruition. Now, the one thing that I missed here right now is the statement of cash flows, or the cash flow statement, as it's called too. The thing is about accounting is that there could be multiple different names for the same exact thing. So that's part of the confusion for a lot of people as well. But the cash flow statement, it's just showing you the inflow and outflow, the beginning and ending balance for a period. So if it's a week or a year or a month or whatever it is, it's just showing that beginning balance and ending balance, and it's telling you how the cash came in and how it went out based off of three criteria: operating, investing, and financing activities. And so if it's operating, it's just from the operations of your day-to-day business. If it's investing, it could be from buying or selling equipment. If it's financing, it could be taking on a loan, or the owner's putting in money to make the business move forward, or they're putting money into the business to make it grow. So, or if they do a distribution to themselves, you're going to see that money go out as well. And so that's all it's showing you, is how it's breaking down how the cash actually entered and exited the business in the different formats. Did it come from operating, or did it all come from financing? So it's like if you see a pumped up accounts, a checking account has a ton of cash in there, you see, is that from operating activities, or is that from the investors dumping in a bunch of money of their personal money? So that's what it's telling you. Where this becomes important is that you have to look at the financial statements as a whole, the three different financial statements together. What most people do is they just look at the income statement. Are we profitable? And then they get confused because they don't understand, hey, how come our net profit, how come that doesn't equate to our bank account? How come we don't have any money in the bank account, but we're showing a profit here? And there could be multiple different reasons why that is. And so that's why you need to be able to understand how the three different financial statements are linked together and how they work. And and once you get that, and you go through that video that I created on financial literacy, then you're going to start to understand, okay, where do you need to start looking, and what are the things that you need to do? If you're a CEO of a business, or you're just getting started, you're in a startup, 80% of your activities need to be probably in revenue generation or product development. Those are going to be the biggest things. The systems and all the processes and procedures, those are going to need to occur, and you're going to have to become more efficient at that. But basically, what you have to do is you have to figure out, how do you solve a problem and provide value to people? And that's how you're going to make your profit, is by solving problems and adding value to people. And that's really it. And that's hasn't changed since the dawn of time. You know, the oldest business in the world is a Japanese construction company, and it's around 1400 years old. And that just shows you that business can be long-term for hundreds and hundreds of years, if not 1,000+ years. And so having more of a long-term perspective on things and really adding value and not screwing people over is the most important thing. Don't do things that are just going to give you a quick buck. That has never ended up well for anybody over a long period of time. And I'm saying this stuff because, how does it relate to the financial statements? Well, all of it relates, because you have to add value, and when you do that, your financial statements are going to look good. And that's just the bottom line. So hopefully this has been helpful. Check out that video I did on financial statements, or financial literacy, and do the PFS. That is where, for me, I had my aha moment. Somebody who's in finance, you know, CFO for a company, that's really where I cut my teeth and had that big breakaway from everything else, because it was applicable. Once you make things applicable, and that's the problem with accounting, is, you know, accounting courses and stuff like that, they want to talk about debits and credits in the very beginning, but it's like you don't even understand what debits and credits are. You know what I mean? Like you can't even wrap your head around that in the very beginning. And so I'm not really sure why the courses talk about that stuff from the get-go, because it's like you need to make it applicable. What is the end result that you're trying to accomplish? The end result is your ability to read the financial statements or create financial statements and understand how they actually operate, how they work, so you can look at your own business or other people's businesses and decide if you want to invest in those companies. And that's really what it is, and that's what it's about. Yeah, the management team and all that stuff has to be factored in there, but at the end of the day, if you want to be able to be knowledgeable and financially literate and savvy, it's being able to read the financial statements. That's what it boils down to. So hopefully this helps. I'll see you on the next one. Peace.